that there is at some stage there was a mention of insufficient funds.
Ah, okay,
So what does that mean? Because
okay, okay, okay,
yeah, because it restricts you from reaching the number you had
okay,
anticipated. Yeah.
okay. Good, good. All right. And even as I answer that question, please note that our trade is about to take profit. And this is the beauty of this software we are using. Okay. So usually for me, when it gets there, when I'm almost about to get all my profit, I would quickly just kill all the trades because right now I wanted how many? I wanted 100 pips. So I could wait for the market to give me that 100 pips. Okay. But clearly, I think I may have already hit my 100 pips because I did more than enough. I did 83 trades. So the market was supposed to go up, and I forgot to mention that before it goes up there, there's some points here we have to pay attention. This one here, this point here, the last high. Let me see if I can draw it. I'll use a trend line just to show you. So these last highs we have there, the market will try and reach there first before it goes all the way to the top. Okay, my computer is very slow this morning. Okay, all right. So this would be where the market will hit first. Okay, the market always does what it has done before, so it will probably hit here first before it goes up there. But as you can see, I wanted 100 pips. Okay, by the time it was getting up there, because it was almost 2 pips, 2 times 80 something, I know it was way over 100. So I could have just closed all my trades here. Now, back to your question, Collins. What happened?
Mm.
Right now, you know, we are trading $1,000 account. This one here, $1,000 account. Now, on the $1,000 account, we're able to take very many trades. Unfortunately, there's also what we call a margin. You see this thing I was saying here? The lot size is very important. And I've always told you to use 0.01. Now, 0.01 on $1,000 account will only allow you to take about 83 trades if you take everything. If I continue trying to take more trades now, it will give me an alert. It will say you have insufficient funds, which means I've eaten up the whole margin. Okay. Whatever I had that I can use. It's like when you have money in your pocket, okay, and you go to buy food, stuff. You go for shopping. You only have 1,000 bob. If you do your shopping, 500, 600, 800, 900, 950, 999, and then you decide, I think I still want to take maybe one more packet of bunga, but the unga packet is 20 bob, and you've done 999. Well, I guess you can't take that packet of unga. Why? Because you've exhausted your margins. All right. So unless you reduce some things you're buying to create money, okay. So in our case, we would reduce. If I kill some trades right now, then I can be able to take some more trades. All right. So the margin just means that you have exhausted the money that you have. Okay, the limit that you had. So our limit was 1,000, but uh, by trading what we were trading, we have exhausted that 1,000. So please look and see we are taking profit now. All the trades I've taken, all of them, all of them are taking profits right here in your eyes, as you can see. So it's just that my computer is a bit slow. You'd have heard all some funny, interesting noise, but in the recording, maybe you will hear. Okay, because of the spread spread by the broker, it might not hit exactly 2 pips. It might go slightly beyond or slightly under. Okay, but if I wanted to, I think somebody also asked earlier, if I want to close all these trades, what do I do? Well, you can close them individually by clicking on the X down here. You can click, stop them, yeah. Or you can just click on the close, the 79, okay. But right now you don't want to close. Why? Because the market is retracing, it's coming back, and then it will go up, okay. So, any other question? So I hope I've answered that question. That's what you do, okay. So we try to not,
Thank you.
yeah, we try not to use all our margin, because that means you can be kicked out. Plus, in Forex, that margin is critical. There could be terms and conditions. My ultimate goal is, by the time we're done with this class, which by the way ends next week, end of next week, I will expect you to literally be able to start managing your trades. So right now we're not managing, but I'll expect you to start managing your trades, which means if only you have a margin of 1,000, and we want to get, that sometimes if you take all the trades, then you lose your that margin itself. Okay. So anyway, I'll explain to you what I mean by managing your trades. So from next week, okay, by the end of next week, we have two classes next week. Okay, the first class will focus now on the money part. We look at money. We'll not look at pips anymore. All right. Which is ultimately what I want you to do. I want you to be able to say, okay, today I'm shooting for maybe $100, or $50 today. That's the ultimate goal. So today we're only looking at the number of pips, and my system is very slow now. We had taken some. We look at the history. Oh, by the way, this is another thing. Many of you are still struggling in getting the reports, right? You come to history, okay, and in the history, what you will see on the right hand side is the statement and done orders. So for right now, I think I don't know how many trades are here, but I guess there are only 1, 2, 3, 4. So the market hit that point and then came down again. But please look at my pip size. It's exactly 2.0, 2.0, 2.0, 2.0. Okay. Well, it's unfortunate that it's a small account. So this is the amount of money you're making per trade, which is 0.1, 0.1, 0.1, 0.1. But when there are many, when there are 100 of them, it will be $10, I think. So we're expecting to make at least minimum $10. Well, not $10 because we're only doing 50, 50, so it'll be 50 times, so it'll be what, 50, 50, 50. Yeah, be like $50 actually. Okay, note that the market has moved back down. So a lot of these things we'll see, they look like they are negative. Okay. But remember, we know that the market is trying to go back up here. So I'll be very careful. Okay. I'll be very careful because if it decides to go back, if it decides to come back to this point, okay, the last low, and break downwards, then we're in trouble. We may have to close the trades. All right. Actually, I'm having a feeling that if it decides to go against us, it could even break that and come to this other lower point, the last low here. Now, is that possible? Yes, it is possible. Remember, I told you we are working on the probabilities. So the market has a higher probability of reaching up here than trying to come back down and come back this way because of the confluence in the 5 minute and the 1 hour. Why? If you look at the 5 minute, you look and you'll see that the market had indicated it's going up. See, the 5 minutes shows that the market is going up. So we are content that the market will try and reach the last high here. So if I mark it again with a trend line, okay, this is where we believe the market is going. And where are we right now? We are here. So it will come back and hit there. Okay, and that again is confirmed by looking at the 1 hour. So let me remove this. I'm gonna use a support resistance line. So, like I said, essentially our class is done for now. Okay, so we're only looking at questions. So and this is the 1 hour chart. There we go. There. So is it possible for this market to turn back and come this way? Yes, it is possible. Remember, this was the support, this was the resistance. It is up there. And like I said earlier, okay, normally it's not very safe if you are here on the 1 hour time frame. It's not very safe to try and take a buy here because you're not sure how far up it will go. It's more likely to consolidate, then break out, or consolidate and come down. So not a very safe place to place a buy, which is what we have done. Not very safe. But to give ourselves the confidence, we can also look at a slightly higher time frame, which would be like the 4 hour, and see what happened to this trade, or rather to the market. What's happening? Is it going up or is it going down? So we always look at a higher time frame to understand what's happening. And my computer is slow. There you go. So on the 4 hour time frame, it looks like we are on the right track. It's also going up. Okay, it has visited that point several times. And because it has done that, okay, it has visited this point. It has done it, let's say, one time there. Well, it broke up, no, not there, but here. So this is the third time, and actually it's breaking up. So we think it's actually going to go like that. But our pip size is so small that even in this 4 hour time frame, we might hit our take profit way before it goes to the next level, even this other level. So anyway, those are just extras. So back to you. Questions? I'm gonna go back.
Yes, I have a question.
Yes.
When we are setting the time frames,
Mm-hmm.
and we click on that we are to now select the time frame we want to work with. I noticed the number of ticks that appear to be present even before you set your time frame. Are they relevant? What are they there for?
By ticks, you mean the blue things?
For example, just try and, because you're the one sharing the screen, just try and click one of them right now.
Click on what? This?
Like now, assuming you are setting a time frame. For example, you wanted to choose, say, 5 minutes or something like that.
Okay, so I'm looking, okay, there. All right. Oh, you are asking.
Now, okay.
The tick.
There is tick on the, no, move to the left a bit, to left. Okay, now that at 5 minutes, we have a tick. It's checked. We have 15, we have 30, 1 hour, 4 hours.
Okay. Are they relevant? As far as your trading as far as your trading is concerned, they're not really relevant. All right. But as you spend more time in Forex, you'll realize what really they are. Basically, the computer comes, or rather, the system or the program by default has downloaded the regularly used time frames. So the regularly used time frames are the 1 minute, 5 minutes, 15, 30, 1 hour, 4 hours, and so on and so on and so on and so on. Which means that there is data already almost automatically downloaded for those time frames. Now, for other time frames which are a little not used much, it's not like you can't get the time frame. It might take a little longer for the computer to download past data. Remember, the Forex is very interesting. This is historical data. We are revisiting historical data. All right. So if you click on 3 minutes, well, it's not used much. But does it mean we will not get anything? No, no. It means we will get it. It might not be as fast. So let me click on 3 minutes. So it will download data for 3 minutes time frame. Okay. See, it's downloading, but it's not. You get the point?
Yeah, I do.
Yeah. So it will take a while. Yes, it has downloaded. Yes, but it took a while because it's not readily in the server. It's not like saved up in your RAM, in your random access memory. Okay, but the others are saved up easily, so you can get them easily. Now, can we?
So I don't have to uncheck them.
You don't have to uncheck them. No, you don't have to. But again, if you want, it's okay. You can. I don't know if that will help the computer become faster. I've never tried that. Let me see. Let me see. You can just leave them. You don't need to uncheck them. But let me just see if that will make the computer faster. Okay, so monthly, weekly data. So I'm actually removing them so that they're not readily available. 3 minutes. I don't think it will really help much. You'll not probably see any change. Okay, now my computer is frozen. Oops. Okay, now it's frozen. I think I'm making it do so many things. Okay, what I had suspected is happening. The market has gone up, it has come down. Now we are at losses, as you can see. Okay. Does it mean we have lost? No, 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 no. Market is still running. It's still running. And the fact that it's still running, okay, I don't know what's going on, but I think my computer is frozen. Oh, there it is. Okay, any other questions? Okay, do you understand your homework from today? I need 2 sets of results. I need, during London Open, okay, I want you to do 100 pips. Is it hard? No. As you can see, if the market was moving very fast, we would have gotten our 100 pips by now. But no, the market is moving very slowly. And my computer, for whatever reason, my provider, internet provider, something is up. Okay. So I'll just show you how to print your statement, which you now know anyway. So you go to history, okay? And then you click on statements. When you click on statements, okay, it will pick the data you have here. And if you want, you can specify the data. Right now I have current week because this is a new account. But after today, you may have to learn to click on that current week and click on today, like today. So what I expect you to do is after you get your first 100 pips, you can send me a statement, okay? And then later in the day, after you finish your next 100 pips, okay, during the London, the New York Open or New York session, then you send another statement. So I'm expecting two statements. The first statement will have only the first 100, or rather, first 100 pips, which is only 50 trades times 2. You can also decide to become creative and do 25 trades 4 times. Okay, but 2 pips. Because I know you might be tempted to say, well, I can do 25 times 4, which is okay, but getting 4 pips in a 1 minute time frame is not very easy. It's not very easy, just so you know. Why? Because of what we call the price cycle. I mentioned that to you. Okay, the typical price cycle of a 1 minute time frame is about 10, 12 pips, which basically means that the market what that means is from the low of the market to the high of the market usually is about 10 to 12 pips. So rather than go for the 10 to 12 pips, we always only take the first 2 pips. So mathematically, the probability of hitting point A for a market that's going up versus point B, okay, is much higher. If the market is going up that way, it's much, much higher to get, easier to get to point A than get to point B. As you can see right here. Right here, we were hoping to get here, okay? And even getting there is becoming a problem. Why? The market decided that, okay, we'll go down fast and then go up. And now right here, this is very telling, by the way. This is very, very telling. Why? Because it has broken this last low here. It broke it here. So remember the definition of trends, okay? So this is a low, this is a high. When it comes to that's low. So it is a higher low, okay? And then a lower high. But now something has happened. It has gone to a much lower low than this one. So it means it might go up, and if it's come down, it might even go lower. And that's the definition of what we call a trend. It might be starting a lower trend. I don't know. It might be reversing. I don't know. If it is reversing, we are in trouble. We have to make sure that we are out of this trade. Okay. But let's see first. Let's see where we are with our goal to get 100 pips. I can see it's almost revisiting. I'm hoping it will go back and it will take profit there. Okay. All right. Any questions? Okay, Mike, I hope I answered your question.
Yes, yes, you did.
Okay, thank you. Okay, I was hoping I can get this 100 pips while we're in this class so we can say at least you have seen how we can get the 100 pips without much stress. Okay, I'm still optimistic. It looks like it's going up. The market is going up, and we should be able to do that. So now it's at one pip, one more pip to go. All right. Any questions? So this is the real deal. This is what, you know, many people, FYI, many people pay lots of money to be able to do what we've just done right now. Okay. So
I just got a question.
Yes.
And the question I want to ask is this.
Yes.
Earlier on, I think in a previous class, you had mentioned about as we are entering the trades, we need to measure. So would you demonstrate to us in this particular situation, particularly when the market is a bit unsteady? How do you do that measure?
Okay. Okay, that's one question. Crystal, I think you had a question. Just 1 second. Let me answer Mike's question.
Okay.
So, if you go on the 5-minute time frame, I guess to measure means you need to go on that time. See, I can measure right now. This is a measuring thing here. You click on it. Okay. So, if you go to the last high there and you come down, oops. Wow, my network is very bad. I'm using Zuku and it's been having problems. That's a measuring tool. It's supposed to tell me how many pips it is. Okay, it's not helping out. But remember, Mike, my goal was you go to the last high and then you measure 2 pips downwards. So ideally,
Yes.
we're supposed to measure, now it's 2.5 or 2.2. As long as the market is somewhere, there's enough room from the top of at least minimum 2 pips, then I can enter the trades. That's the idea. Don't enter the trades before the last high if it is less than your pip target. If your pip target is 2 pips, your last high to where you are entering your trade should be minimum 2 pips. Right now it's 2.4, 2.7. So you measure that and see 2 pips there. So 2 pips means I can mark there and say if the market sorry, my internet is having issues. Okay, I've measured, I think 2 pips is somewhere around there, which means I should not take trades above that line. Why? Because above that line will not give me 2 pips. I hope you understand that. If you take the trade above the line, your 2 pips will go above the last high. And remember what we said about the markets? The market always does what it has done before. Meaning, you don't want, it will be stopped out. It will not reach your target. Your target is the last high. This is the last high. So you want to take your pips and be done by that trade before the market reaches up there. Because when it reaches up there, it may decide to stick around and then go down again. So you're only guaranteed up to 2 pips there. So is it safe to enter trades just because you think it's gonna go up? No. You measure to make sure that if it goes up, you have at least minimum 2 pips from the last high. Okay? All right. I hope that question is clear, Mike.
Yes.
Okay. All right. Crystal, you had a question.
Yes.
Yes. What's your question?
My question is, when you find and this has happened to me frequently, when you find an email saying that your urgent notice margin required, does it mean that now you have to close some of the open positions?
Okay. Technically, that is true. That is true. You need to close some of them. Okay. But because you're using a demo account, you don't have to worry so much. Okay. You don't have to worry so much. However, when you start dealing with real money, your real money, then whenever you get those alerts, you have to quickly get to your system and close some trades. Otherwise, you'll be stopped out. Stopped out means you'll be kicked out of the trading. You know, the system will automatically kick you out. So you quickly go to the system and you close some extra trades. Like now, see, I only wanted 50 trades, but I clicked and there were too many, 79, which is too much. Okay? So ideally, again, if this starts going against me, I will come here and start killing some of the trades. How do I kill them? we'll probably just click on those X's, okay, to close the position. But if I close them, I'll be closing with a loss, with a net loss of minus 2.4. So if I close 10 of them, that's $2.4. See, so there is a penalty for that. Yeah. So the idea is you don't take too many trades. Okay. But because we are learning a strategy, it is okay. We're learning a strategy. Beyond this, beyond next week, you are now responsible. You have to learn to manage your trades. In fact, the gem in trading forex is the ability to manage your trades. What you're going through is still considered basic, fundamental, very, very fundamental. But anybody can take trades. But how then do you manage the trade? Now that's where the rubber meets the road. For you guys, you are hitting two birds with one stone. First, you're learning a trick that many people don't know in the market. They don't know they can get 100 pips in less than an hour. If the market was moving right now, we'd have gotten now 100 pips. But the market is very slow. But once London opens, this will happen so fast, you won't even know how it happened. It'll happen so fast. All right? So right now, I'm happy I'm seeing that the market has slowed down. It is not coming back to revisit. So it seems like it might actually, it's forming a wedge over there, but a continuation wedge. I think it will go up. All right? Anyway, other questions? Go ahead. Remember, you might not have much time, much opportunity anymore to ask other questions because this is the last class for the week. And from now on, I'll just be expecting to see your statements today, tomorrow, and on Friday. 2 statements. One, as soon as you get your first 100 pips during London Open, and then one after London Open, which is New York Open, another 100 pips. I'm hoping I can see that. And what will happen after this week? Next week we shall be focusing now on the amount of money you are making, which is ultimately our goal. All right, the amount of money. We shall have targets and how much we'll be making. Okay, so if there are no other questions, then I will end the class. This market is running against us. Remember, it's consolidating on the 1 minute. Okay, actually on the 5 minute and on the 1 minute. So we should have done a bit of our due diligence. In other words, we did take our trades here. And was it wrong to take our trades here? No. Why? Because it was near the last low on the 1 minute. Okay. But maybe we should have used the 5 minute better. The 5 minute would have given us a better idea of where to enter. But then again, this was a class and I did not pay much attention. So I am paying the price for that. So you see, this is where we should have been taking our trades. The last high, where the last high should have been. When you're in this consolidation, this is the low and this is the high. This is the last high. Okay, and this is the, oops. Okay, I don't know what's going on here. This network. Okay, so that's the last high. And this is the last low here. So I should have taken a buy anywhere near the last low, but I'm still confident that this market is still going to go up and okay, and take profit. Okay, my system has really become slow, so I need to end the class because now it's not moving the way I want it to move. Any other questions? Okay, now you know how to open an account, given any kind of specifications of the account, especially the capital and the lot size. All right. Now that you know how to open an account, you know how to trade, whether it's a buy or a sell. Okay. But you know that before you trade, you have to look at your time frames. Okay. You have to open up a bigger time frame. First, you have to decide, where do I want to trade? Do I want to trade in the 1 minute or the 5 minute? Now, if you're a scalper, if you're not a scalper, then you can use higher time frame. Again, that one you can read on your own. Okay, we don't have the luxury of time to go into long-term trades. But mine was just to show you how you can make income daily. You can actually go in and make your 50 pips or 10 pips daily, easily, and make some money. So you look at the higher time frame to give you direction. Most of the time it will work. Once in a while, it might not work. Like today, for some reason, I did not pay much attention. If you look at the higher time frame, the 1 hour, it seems like we've reached the top. And when you reach the top, it means the market will actually be turning around. You see, the last high. But again, we were not too sure. So it could go either way. It could go up, it could go down. But it will consolidate here for a while on the higher time frame. But we go on the lower time frames to see what structure the market is making, is forming, because the structure may even inform us better how to enter that trade. So the structure here is still a consolidation, and I'm suspecting that by the time London opens, which is very, very soon, in about an hour, yeah, then volatility will increase, which means that because the market has been coming from down slowly, okay, eventually then it will break up. Okay. Then we go to the 1 minute time frame, and now you decide how to enter the market. Okay. On the 1 minute time frame, it clearly showed you the ups and downs. Okay. Then the up and then the down. And I'm hoping that it will actually turn around and go up. If it goes against us, we are in trouble, because those trades I've taken, I will have to kill them before they hit their stop loss. Otherwise, they'll become huge losses. All right. So,
No.
yes, Mike.
Yeah, I've just got another question.
Yes.
As you are explaining about our strategy as scalpers,
Yes.
you mentioned that we could either do a 1 minute trade or a 5 minute trade.
Yes.